YouTube, what is back? It is day 5. I am going to go over key levels, okay? This is gonna be kind of like liquidities, highs and lows, opens of candles, but they're at specific time frames, okay? The market is an algorithm. It moves and reacts to certain time at certain times, certain prices, candles that are formed at certain times, and things like that. So we're going to go over key levels, how to use them, things like that. Let's get right into the video. Okay, so super easy. The first key levels that you should always be marking out is previous day and previous highs. Why are previous days and previous highs super important? It tells you where the market could be going. Notice how I said where the market could be going, because it doesn't mean that it was always hit it, okay? Let's take, for example, we are in a bullish trend, okay? If you see and take a look at this bullish trend, we tend to see that most of the time, if we're in a bullish trend, the previous day high is always taken, okay? Previous day high is always taken, previous day high is always taken. Vice versa with a bearish trend, right? Previous day high is always taken, previous day high is always taken, yada, yada, yada. You got the gist of it, okay? So the market wants to, in a bullish trend, hit the previous day high, bearish, vice versa. Now, how can we use that when we are in the trading time, right? Let's take, for example, this candle right here that just formed on Sunday night, okay? Let's mark out the previous day high and previous day low right here. Now, as you can see, the previous candle never tapped the previous day high or previous day low either. So we have two previous day highs. Now, on this Sunday, we could expect to see price come and take this liquidity up at this key level, which is the previous day high. Okay, so we may see some sort of reaction towards these key levels, or using it as a target, because we know that at some point price will most likely go up to those highs because it's a key level. So we could see price come down and tap into, and it could act as a liquidity head lower, or we could go higher and target the other high that's created on the daily candle. Pretty simple, okay? It's always easy to use it on the times where we are kind of confused on where market can go. If we are consolidating, you can expect to see both highs and lows being taken at some point within the weekly range. So let's take, for example, this right here. Okay, this right here, we see that price came in and tapped this previous day low. Now we can also expect to see at some point, maybe in the future or even in the same day, that price will tap this previous day high right here. As you can see, price came down. Sorry, I was about to sneeze. Previous day low was taken, and then we see the candle previous day high is then taken, okay? And then, let's see, we failed to take this previous day high, so what are we expecting to see price go to? The previous day low, which we get right here. Let's say we have right here, we get this candle of this low taken. What do we expect to see? We expect to see the previous day high to be taken, okay? Very straightforward. Another few key levels are at certain time frames, okay? I want you to take notes at these certain time frames because you can actually use them as support or resistance. The first time frame is the 6 p.m. open, okay? This is when the new candle day opens. So 6 p.m., we see the open of the candle is right here. You want to mark out this 6 p.m., okay? Price tends to usually come back and use this 6 p.m. as either support resistance, or you can use it as a target, okay? 6 p.m., super important. Second is the, again, 9:30 open, okay? This is what I love to use. As you can see here, 9:30 open. If you were to take a trade, like I said in the trade recap, you could have targeted the 9:30 open, okay? If a 9:30 open doesn't have a wick, that means that in normal stocks or the SPY or things like that that only are during regular trading hours, there is no wick at the bottom of those, which means that you can target those because price usually likes to make a high and a low wick. You could target this 9:30, and we can see here price reacts off the 9:30 as well over here, okay? Great. Next is the midnight open. Super important. How do we use the midnight open? Typically, for a midnight open, which is right here, typically this is called true day open, okay? Usually, let's say midnight open starts and we see that midnight open or price is usually below midnight open, you can tend to see price come back into and be bullish for the rest of the other sessions, okay? Let's say if midnight opens up here and most of the price is up here bullish up above the midnight open, you can tend to see price come back down into the midnight open and go higher, or we can see price go lower, use this midnight open as a resistance and head lower and continue lower for the rest of the day. Love using midnight opens. It also kind of help establishes your bias on whether or not you should look for buys or shorts. Next candle, next open that we have is the 10 a.m. Why is the 10 a.m. important? It's because it's 30 minutes after New York open, and it is also the creation of a new 4-hour for value gap, okay? 10 a.m. As we can see here, 10 a.m. to 2 p.m. is a 4-hour candle. We were bullish in the morning. We were above midnight open. We were above value area high. Everything, we were very bullish. We were in the new day opening gap, things like that. We can see right here, when 10 a.m. opens, we get a small 10 a.m. wick. And then all of this is just creating that new 4-hour candle. We create the low of the 4-hour candle here of the 10 a.m. And then we come back and close right here at around 2 to create our 4-hour candle. Great. You can also use this 10 a.m. as some sort of support and resistance again. Let's take, for example, this right here at 10 a.m. Right here. Okay. 10 a.m. right here, okay? 10 a.m. We get low movement up, and then we make the low of the 10 a.m. 4-hour candle. So now that the low has been made of the 4-hour candle, we tapped into the fair value gap. Our bias is bullish. We can then go and see to use this 10 a.m. candle paired with some sort of fair value gap, such as right here. Stop at the low of the 4-hour candle, and you can expect to pretty much target the high of the possible 4-hour candle. Great. This video was super simple. If you have any other questions, I would highly advise putting these midnight, 10 a.m., 9:30, and 6 p.m. as your line saved chart, whatever it's called. And you always want to mark them out before you start trading. Okay, mark out your 6 p.m., mark out your midnight, mark out your 9:30. If you haven't found a trade and you want to find your bias on where market is going to go, mark out your 10 a.m., okay? What I want you guys to do is go on your chart, go on last week, take one day at a time, take Monday first. You're going to mark out 6 p.m., midnight, you're going to mark out the 10 a.m., the 9:30 a.m., and see how price reacts to those levels, okay? Then you're going to do that for Tuesday. You're going to do that for Wednesday. You're going to do that for Thursday. You're going to do that for Friday. And you're going to see a consistent theme of how these price react to these key levels. All right? Great. I'll see you in the next video.